So let's start by giving a general overview of several types of financial institutions. For example, consumer banks, which offer savings, checkings, and loan services to individuals. Commercial banks, which offer saving, checkings, and loan services to businesses and individuals, as well as investment banks, right? They offer financial services to individuals and corporations, as well as governments. Most of the banks you are familiar with are actually a blend of all three. For example, Chase Bank offers consumer, commercial, and investment banking related services. So keep that in mind. Financial markets are places where individuals and organizations borrow funds, are bought together with those having the surplus of funds. It facilitates the buying and selling of securities. It matches savers to investors. Financial institutions act as an intermediary between savers and investors who participate in the financial markets. Investment banks act as an intermediary between investors, those with money, and corporations that need to expand, go public via IPO process, initial public offering. Something that you might hear of is commodities. Commodities are any movable goods, including agricultural products, energy resources, precious metals, and currencies. They exclude money and securities. So very commonly you hear of indexes in the stock market. So the Dow Jones average, 60 leading corporations, Dow Jones Industrial Average. This one might look familiar. It started off as just 12 main U.S. companies, industrial, but now it's 30. S&P, Standard & Poor's, 500 largest corporations by capital value. NASDAQ Composite, all companies listed on the NASDAQ exchange. And on the bottom are a couple bond indexes, which aren't super important for this video, so I'm not going to go over them. So this is the breakdown of what's in S&P, Dow Jones, NASDAQ 100. So S&P has a fair blend of different types of sectors. This is slightly outdated, but similar today. Mostly informational technology with a somewhat equal blend of everything else. Dow Jones, the top 10 stocks make up 54% of the index. They're just industrial stocks, really. NASDAQ 100, top 10 stocks make up 56%. NASDAQ is comprised primarily of technology and more innovative companies. So between the three of these, S&P 500 represents the best proxy to see how the market is doing because it offers the largest blend out of these three and it gives a fair representation of all sectors. You might be wondering how 30 stocks can be a proxy for how the market is doing. And actually, based on the Dow Jones theory, the stock market actually follows pretty closely what these Dow Jones stocks are actually doing. But the S&P 500 is a better representation of how the market is performing.